Hello guys, welcome to SMC trading course. Hope you all doing great. In this video, I'm going to discuss Fibonacci. Fibonacci is a tool which helps us to show the zones where the price might come back or retrace back. That is to the discounted or premium zones for a up move or a down move. So what happens is that when the price generally moves in an uptrend like this, what the price generally tends to do is that it breaks this high and creates the low. But when it creates the low, it generally comes to a discounted price before it moves up high again. Same is the case for a downtrend. So when the price moves down like this, it comes to a premium supply zone here, and then the price shoots down again. Again, it retraces back to a premium supply zone or a premium price here, and again shoots down again. So what this Fibonacci tools helps is that it helps to mark the areas where the price might retrace back, either to the discounted areas for a uptrending market or to a premium zones for a downtrending market. This is a very important tool and you must start this tool. This is what the tool is. It comes back to these important zones. So here you can see it is generally 70 to 100%. So I'm going to the settings to show you my setup. Here you can see that I've marked 0, 0.79, 0.886, 0.7 and 0. And 1. This is what my setup is for Fibonacci, which I use in SMC trading. You might screenshot it or you might take a picture of it. And next we come how I use Fibonacci. So you can see here that for this move, it comes back to this discounted price and shoots up again. Again, what it does is that it comes back to this zone, again shoots up, and what we expect is that the price to come back again to this discounted price here and then shoots down again. Again for supply zone, what the price does is that it comes back, you can see it comes back to this zone, shoots down, again it comes back to this zone, shoots down. So this is how Fibonacci tool is used to mark the proper order blocks. Now I'm going to show you how Fibonacci tool is used to disqualify many of the order blocks and properly focus on few of the order blocks. Where the price moves in a trending market, suppose I'm saying that this is an uptrending, the market is causing this major low and major high here, and then the price comes back again and again, creates this minor high here and breaks this high here, creates another minor low here and again shoots up. So you could see that there is an order block here, there is order block here, and there is another order block here. So what the price generally does is that it comes to this order block and there are few retail traders who buy from these zones. So the price shoots up a little bit and again comes back to liquidate these order blocks up here and comes to this order block and then shoots up again. So how does Fibonacci tool actually helps? For this high to this high, for this low to this high, the price comes back to the discounted zone, grabs all the liquidity up here and then shoots up again. So for this move up from this level to this level, you could see that there might be an order block here. There might be another order block here and there might be another order block here. So what does this Fibonacci tool does is that it helps us focusing only the discounted order blocks. So you may say that it helps us in excluding this order block. Same is the case for supply zone. What the price generally does is that it causes this major low, cause this major high, breaks this low here and then causes this major low here. And what the price generally does is that it comes back to this premium order block here and then shoots down again. So this Fibonacci tool helps in marking the premium order blocks for the supplies and helps in disqualifying this order block. So you can see how this Fibonacci tool helps us in marking the proper order blocks and disqualifying many of the order blocks. Now coming to the examples, I will be showing you from live charts how this Fibonacci tool actually helps. Going on to the persistent, you can see that the price moved down, caused this high, low, another high, and broke this high, causing change of character up here. And this is a clear uptrend from this level, because it broke this high, and there is a breaker block here, which I will come in the next topic. And what the price did is that it took support from this breaker block and moved rapidly up, because there is huge buy order from this breaker block. So now coming to Fibonacci and how I use this Fibonacci in this trade. You could see that what the price did is that it caused this high, consolidated for a bit here, and then it shot up, again came down. And how this Fibonacci tool helps is that it helps in identifying the discounted zone. For this move to this move, you could see that the price retraced back to this 70% here. There is a breaker block here. And what the price did is that it retraced back to the 70% and then shot up again. And next what it did is that you could see that the price shot up, made this low, consolidated here for a bit, and then shot up again. Again retraced back to this price, again shot up again. So there might be an order block here, there might be an order block here, and there is an order block here. So how to mark this discounted zone? You use Fib from this low to this high, and you could see that there is a clean order block up in 79 to 88.6%, and you take this order block only, disqualifying all these order block up here and up here. So this is how the Fibonacci tool helps in marking the order blocks. And now I'm going to move on to the next example. For this graph Alchem, you could see that the price has moved up, causing higher highs and higher lows, higher high, higher low, then again higher high, higher low, higher high, and it broke this structure, causing a change of character up here. And what it does next is that it shot down again. So from here you could say that it broke this price up here, and it caused simultaneous break of structure to the downside, identifying that this is a proper downtrend. For this downtrend, you could see that when the price moved down to this level, up to this level down here, there is an order block here and here, and there might be an order block up here. It consolidated for a bit and then shot down again. So how does this Fibonacci tool helps is that there you mark this order block and you mark this order block. As a smart money trader, what you do using Fibonacci is that you disqualify this order block because this does not qualify according to our Fib levels, and you take this order block because it comes to 70%. And what the price does is that it retraces back to 70% and then shot down again, causing breakout structure here. And what does the price does next? It caused again breakout structure here. So what you do is that you take your Fib levels up here, and you could clearly see that there is a doji candle up here, and you take this as your order block. And what does the price do is that it retraces back to this order block and then shot down again. And after it shot down and created liquidity up here, and what it does is that it caused change of character. It comes back to this discounted price and then shot up again. And what it does next is that as it moved up, causing simultaneous breakout structure to the upside, indicating that this is going to be bullish from here on. And how does this Fibonacci tool helps is that you use Fibonacci for this move up, and using this Fibonacci you could identify there is an order block here, there is order block here, and there is another order block here. So you mark these order blocks, order block here, order block here, and another order block. And what does the price does? The price comes back to this order block, and what does it do? It creates liquidity up here. You could clearly see. And the price grabs this liquidity, comes to this order block because there is slight amount of imbalance up here. You could see that there is imbalance up here. Slight imbalance. And what it does is that it fills the imbalance here, comes to this order block, and then shot up. So you could easily understand how this Fibonacci tool helps in identifying and disqualifying these order blocks. So what you do is that you take the trade from here, putting a stop loss below this order block, targeting this side, and it easily hits your take profit with 9.6 error. And what you do next is that after it caused this low here and this high here, there is a chance that it retraces back. So what you do is that you take this move up here, and you could clearly see that there is order block here, there is order block here, and it matches with the 70% up here and 88.6% up here. You mark these two order blocks, and since there is an imbalance up here and liquidity up here, you take the trade, putting stop loss below this order block and marking maybe this high, and the target hits. Next, coming on to Suzlon, it is a downtrending. As you can see, it caused downtrend from here, and what it does next is that it caused breakout structure to the upside and simultaneous breakout structure to the upside. It broke this high, it broke this high. You could clearly see that. As it broke this high, what does the price do? You take fib level from this level to this level, and you could clearly see that there is an order block up here, and there is order block here, there is order block here. And what does the price do? It retraces back to the 79% order block, and it shot up again. As it shot up, you mark these levels, and what does the price do? It retraces back to this last order block and shorts up, causing this massive move, which is nearly, I have shared this trade, this is a massive move which is nearly 23% up. And I booked most of my positions here because there is an order block, a supply order block here. So I booked most of my position, let me say 80% up here, and then remaining I will book at this side. So this is it. This is how Fibonacci tool is used, and it is a very important tool in SMC trading because it helps in removing all the rubbish order blocks and focusing on only the premium or discounted order blocks. Now moving on to the next topic.